All right, well, in case you missed it, or unless you have a real job, unlike me, the Federal Reserve did speak today, and I found an article that sums up the highlights quite nicely. So I thought I would just go over it with you real quick before we got into the charts. Scrolling down here, they just put a paragraph on basically like all of the important things they were talking about. The first one, or the first one on this meeting anyway, is Powell won't give stock trading information about his colleagues. We knew he wasn't going to do that, so we're going to skip right over that. Let's get down to the important part. It says Powell essentially confirms that rates will go up in March. Now, when they came out, they said that rates are going to remain unchanged right now, and that's probably why we had that little spike in the market right at the beginning of the meeting. But then we had that nice little rollover because they confirmed they were definitely, or at least it sounds like they are definitely going to be raising rates in March. But it says the market thinks the first rate hike will happen at the Fed's next meeting in March. But for anyone unsure, Federal Reserve Chair Jerome Powell just made things real clear. He said, I would say the committee is of a mind to raise the federal funds rate at the March meeting, assuming that conditions are appropriate for doing so. But he did note that the Fed hasn't yet made a decision, and March is a long time away, so the economic situation could change by now and then. But he's basically saying that expect a rate hike in March. Now, the buzzword that Wall Street did not like was sooner and perhaps faster. So that's probably why we had that big sell-off right after they got into talking about what they were going to say. But it says, that's how Federal Reserve Chair Jerome Powell describes a potential path for rate hikes this year, particularly compared to 2015 when the Fed last hiked rates on an every other meeting schedule. So the market kind of took that. They are going to be raising very aggressively in probably every single meeting. And that says that's not the message that investors were hoping for. After that, the Dow turned negative, falling down 70 points. The index had been up as much as 500 points earlier on the day on Wednesday. The S&P 500 and NASDAQ gave up some of their gains, and the S&P 500 was up just about 0.1%. And the NASDAQ rose about 0.6, but both were significantly higher an hour before that, and probably they are lower by now because they were still falling when I was reading this article earlier. But it says investors have successfully been trying to read the tea leaves on the Fed for weeks, but still Powell said the Fed and investors are on the same page for some reason. I agree with that statement because it definitely looks like there's a ton of uncertainty in the market right now with all the chop that is going on. But he also said, we feel like the communications we have with the market participants and with the general public are working. Okay, let's get down to the next one. It says, Powell gives some hints about when he'll start putting the brakes on inflation. So that was very important when he started talking about that. He says, the Fed said it will raise rates soon, and if you want more details on that, the Fed Chair Jerome Powell says you're just going to have to read between the lines. Okay, perfect. I thought we were on the same page here. He says it's not possible to predict with much confidence exactly what path for our policy rate is going to prove appropriate, and so at this time we haven't made any decisions about the path of the policy, and I stress again, we'll be humble and nimble. So just a little bit of guidance there, but he says that what I thought was pretty good news is the economy no longer needs this much help. But I mean, there's a lot of people have been thinking that for quite a while. But it says America hasn't fully recovered from the pandemic yet, but the recovery is coming along nicely. The economy doesn't need as much help as it has gotten from the Federal Reserve over the past 2 years, said the Federal Reserve Chairman Powell during the press conference, and he says that's why the central bank is moving to end its stimulus program and raise rates, which is also amid at alleviated inflation pressure. Like most forecasters, we continue to expect inflation to decline over the course of the year, and I agree with that statement. I think it's probably going to decline a little bit faster than most people are thinking. I don't think it's going to get anywhere near their target rate, but all in all, I didn't really think there was a whole heck of a lot of new information that came out of this. That's why I was surprised the market just sold off so hard after he started talking. But the market will do what the market does. So let's get into those charts. All right, so let's get into these market charts. I always start off with the QQQ, or at least very often I do. So that's what I'm going to start off with again. Before I get into that, please remember, not a financial advisor. Please make all of your own trading decisions. I'm just trying to show you what I am seeing in the current market environment. Now, with all that being said, if you'd like to support the channel, you could just like the smash button. I would appreciate that. And also, I do have a Patreon group. It is only $10 a month. The link is down there in the description. I am very active in the Discord, and I also try to put a pre-market video up every single trading day, just showing you my watch list and, if I see anything significant in the market. But let's get into this chart, and this is the daily chart of the QQQ, and man, the trading day isn't over yet, but this is one nasty red reversal candle. This market is reversing faster than I thought it would, unfortunately, because of the Federal Reserve's comments, I'm guessing. But came all the way up to that 8-period exponential moving average and turned around just like clockwork. I ended up getting rid of 2/3 of my QQQ calls that I had just before the Federal Reserve started speaking. So if I probably would have waited until they had that quick pop right after he opened his mouth, I could have made a little bit more. But after seeing what the NASDAQ is doing right now, it makes me wish I would have sold all of those calls as he was, right before he started talking. But it is what it is. I took, 2/3 off because I just didn't want the risk after or going into that meeting, and it looks like my intuition was right. Should have got rid of all of them. But anyway, after this kind of a day, and like I said, the trading day is still going on right now, but I highly doubt this candle is going to turn around. There's just not enough time left in the day, and there's too much downward pressure. It looks like we could be in for another downdraft. We already took out the low from yesterday, and if we take out the low from the day before that, this is going to be another move down in the market. At least most likely, odds favor that anyway. And the market is probably looking like it needs at least one more puke down anyway to get a full washout, even though, there was a lot of climax volume coming in. I was really hoping that this was going to be the bottom. It could be the bottom, but after looking at this nasty day, odds favoring that we're probably going to be moving up are pretty much out the window. From a technical perspective, it looks like we're probably going to be heading lower, unfortunately. Hopefully I'm wrong, but that's the way it's looking like right now. Well, let's take a look at the next one, which is the spider. And the S&P 500 also printing that nasty candle, jumped all the way up to the 200-period simple moving average, and then made it to the 8-period exponential moving average. And what do you know? Turned around on clockwork. It's amazing how many times these indices will find resistance right at that 8-period exponential moving average. And it's just just eerie, like how often this coincides with like major news that comes out. I mean, it just doesn't seem like it should be that coincidental, but I guess it is. Let's take a look at the diamonds. Pretty much the same thing. Made it a little past that 8-period exponential moving average and printing that nasty red candles. So what we're looking for is the low of 2 days ago to hold. If that holds, if it holds for a couple more days, we might be carving out a bottom. But if we take out that low within the next couple of days, then I'm guessing we are probably going to be headed to newer lows. But let's take a look at the IWM. You can see the IWM did not make it up to this target. Just made it right up a little past that 8-period exponential moving average, and it is rolling over as well. But you can definitely see that the IWM is the weakest of all four. So not looking good. I might as well just get that thing out of here because that's probably not relevant anymore. But that's what the market is looking like. We're going to need another card to come out of the deck tomorrow to see what direction we got going. I'm not saying we're going to take out this low just yet, even though it's looking like it. Hopefully this low holds and we can, start carving out a bottom. But let's get into the trades that I made today. All right, so let's get into the trades that I made today. And the first one I want to start off with is Clean Energy Fuels Corporation, ticker symbol CLNE. I talked about this one in my pre-market watch list video, and I talked about how I figured CLNE would have some resistance at this 50-period simple moving average because it also coincided with this resistance area right here. And unfortunately, I did not take my own advice. I tried to make a trade in it, and it did not work out. But the market was gapping up strong, and of course, this one was gapping up, so I thought this one might have enough oomph to push through that 50-period simple moving average. But unfortunately, that did not happen for me. But our newest Patreon, King Tommy, traded this one, and he actually got in a little bit earlier than me, and he took his profit just before that 50-period simple moving average. So I'm glad somebody made some money on that advice. And normally I would say savor the flavor, Tommy, because it's not going to happen again. But I'm already 0 for 2 against you since you joined. So not until I get some W's underneath my belt am I going to be saying anything too cocky. But let me get this line out here, and let's get to what this trade looked like. I was trading it on the 2-minute chart. So let me back this sucker up. And this thing is really rolling over today too. Good thing I did not hold that one. That's why these are just day trades. But CLNE had a nice little blast up, made this ceiling right here. And that's when I was looking to get into CLNE. If you are familiar with my channel, you know I like to trade these type of trades when they're super strong in the morning. I like to buy a break above a recent ceiling, or if the stock gaps up and then starts to like make one of these J-hook type patterns and find support at this white line, this 8-period exponential moving average, I like to try to catch that next leg up. But with CLNE, I got stopped in at $6.42. The stock was up a little bit for me. As it was moving up, I was raising my stop loss up, and then it eventually stopped me out at $6.34. So tiny loss of about, let me see where I can put that. There it is. Right about there, give or take. But it ended up being a loss of, what is that, about 2% or so? Maybe 1.5%, so it wasn't that big of a loss, but unfortunately I should have heeded my own advice and watched out for it, because that 50-period moving average was just something it couldn't get through today. All right, so let's get into the 2 other trades that I made today, and both of them were option trades on the QQQ. The first one I want to talk about is the one I opened up yesterday. I bought the $347 call option on the QQQ. I got filled at $5.13, and that was just, seemed like a horrible fill, because when I put in that order, the bid and the ask were well below $5, but it is what it is. Maybe my quotes are a little bit behind since I'm out here in the middle of nowhere, and the market's also been moving so fast. But I thought for sure I was going to get executed well below $5, but it is what it is. Entry was at $5.13, and I got out on 2/3 of those calls just before the Fed started talking at $7.98. In hindsight, I probably should have dumped them all, because the market absolutely rolled over after that meeting got started. But hey, it is what it is. And another one was a day trade. But let's actually go to the 5-minute chart, and I'll show you where these trades took place. Actually, I had an order to get rid of 2/3 of those positions, I think at like $8 and maybe 79 cents as the market was moving up right here, but it just missed my order. And then, the market kind of tailed off, so my contracts went down in value. I was kind of sweating out a little bit, like, should I get rid of them now and take my gain while I can? But I was thinking that the market was probably going to hook back up, and that's what happened. And I ended up taking them off right about here. I think I got filled, I think it was right about here. Market went down just a little bit, but then went sideways until the meeting started. And then when this little move happened right here, I bought some $343 puts on the QQQ, because I don't know if you follow these Fed moves, but it seems like when the Fed talks, the first move, either up or down, is usually a false move. And usually if it's up, it's almost every single time a false move. Not so much when it's down, but when it's up, if my memory serves, it's like 100% of the big first moves up after the Fed speaks are, something that needs to be sold into. Don't quote me on that. But anyway, I put an order to, buy some of those puts. But the hard thing about it is, even though I know that this is usually a false move, the option prices are all over the place. The spreads are crazy. So it's not not, you got to have a little bit of gusto to get in there, because you're going to, and plus you're going to get a bad fill. But anyway, I got filled on those 343s at 67 cents, and I took profit right here at about at $1.54, so a little bit more than a double. In hindsight, I probably should have held on to them, because they were worth a heck of a lot more just about an hour later. But who knows where the market's going to go after the Fed speaks. But one thing I do know is almost always that first move is just a fake out. So if the market goes down, I'm looking to buy some calls, and if the market goes up, I'm looking to buy some puts, because it just invariably always goes the other way just a few minutes later. But those were the trades that I made today on the QQQ. Well, that's all I have for this one, everybody. If you have any questions, please leave them for me down there in the comment section. I'll get to them as soon as I can. Thank you so much for watching my video all the way to the end, and until next time, take care, everybody.